The advice that we give to our private clients who are going to buy, a lot of them are going to do this regardless of what we say. We say have 80% of your Bitcoin price exposure.
And I think that's what people are starting to feel now as you're seeing the demand ramping up from these treasury companies. They're going to be buying all the time. Their goal is to accumulate more Bitcoin per share for their shareholders.
We're seeing crypto-like returns. We've seen companies doing 500% in the last couple of weeks. Blockchain Group's up 2,000% in 6 months. I think Smarter Web's up like 8,000%. I mean, this is insane. And I see these getting priced differently in the market as well, as far as the correlation of the stock price to Bitcoin's price. So how do you look at those?
I think that's a fair way.
Cory and Ben, here we are talking about maybe the most exciting topic in the Bitcoin space right now, which is the Bitcoin treasury companies. And I know for a lot of people in the industry I see, they're talking about a bubble. They're talking about building equity, but not any value. And I think there's a lot of misconceptions around that space. I've also been sort of reframing the way I look at this, but I want to hear directly from you. Congratulations on just launching Sequence. We're trying to get that figured out. About $385 million raised. One of the biggest launches that we've seen so far. Congratulations on that. What do you think separates you from some of the other big launches that we've seen in the last month or so?
Yeah, so I'd say first, thanks for having us on. I'm glad to bring my homie Ben Werkman.
Yeah, excited to meet you.
Happy to be here.
Yeah, Chief Investment Officer for Swan. And obviously we're doing a lot in the space. And I'd actually kind of like to start with essentially what happened over the last couple of years that kind of got us to this point. And I'd say really, if you think, we both kind of got into the space probably, maybe you even earlier than I did, but 2017. And let's call that kind of like the crypto era was 17.
Well, I started 2015, then I went to crypto rabbit hole.
And then
in 2019, I went full Bitcoin.
Right. So if you think about, call it like 2017 through about 2023, the whole thing was basically Bitcoin versus crypto and trying to overcome $100 billion of altcoin VC money that was trying to market coins and claim that they're better than Bitcoin. So the top of funnel was basically lying about Bitcoin so that they could sell their pump and dump tokens.
Right.
And what changed in the market structure was the launch of the ETFs in early 2024, January of 24, and then the rise of these treasury companies. It means that people now are not, coming in necessarily. I mean, the majority of Swan clients now for Swan Financial Services actually access Bitcoin price exposure through a ticker in their brokerage account first. They're buying an ETF or they're buying MicroStrategy or one of these other treasury stocks first, and then they go down the rabbit hole. But they're learning about Bitcoin. We talk about Uncle Larry at BlackRock, Auntie Abby at Fidelity, and Crazy Cousin Mike over at MicroStrategy. That's who they're learning from.
Yeah.
And it's mostly really good information about Bitcoin that entices people to actually want to learn more. And then they access your show or they read Len Alden's book or something, or find a Swan YouTube video, and they're kind of down in the funnel a little bit. And so when I dovetail, like for us, even to just keep on serving our 2,000 plus enterprise clients, that's the number of enterprise accounts we have, like businesses that buy Bitcoin, and then, 100,000 plus Swan clients. So many of them are looking at Bitcoin now through a lens of like, okay, I feel like Saylor's doing 15 things. Which of those are applicable to my family office or my small and medium-sized business?
Right.
And so that's how we have to talk about it. So it basically pulled us in starting really like mid last year, Q3, and definitely into Q4 with the red wave and everything. We got sucked into this and had to talk about it through that lens. And then once we kind of dove into the space, we were like, it's not a big leap for us to go from serving these enterprise clients and, being involved in the media and education around this space to go whole hog and actually start doing the work around Bitcoin treasury companies as well.
Yeah.
And so, maybe I'll pause so I don't have to talk the whole time, but, Ben, if you want to just kind of talk about
Before we get over to
for it,
Ben,
Mark.
I love the point that you brought up, and I think it's worth just bears repeating. So sort of like the crypto space was sort of always like an arbitrage on the trend, right? It's always trying to leverage Bitcoin, and to your point, sell these other tokens so they can go buy Bitcoin. Yeah, it's kind of a thing. And unfortunately, it was like a DDoS attack against Bitcoin of all this big money coming in, and they were able to buy tokens at a discount and then dump them on the market. They liked that. But we've talked quite a bit about sort of these technological revolutions and these phases of capital that comes in. And in the second phase of capital, where you have institutional capital, they can't go allocate $1 billion to Shiba Inu
True.
or Dogecoin. So we have real allocators, and they're looking for real plays that need to be registered with the SEC, and it has to be liquidity, and I have to be able to do options against them. And so it's just a natural part of this evolution that we have institutional money, and it's looking for the way to get in. It also wanted more volatility on Bitcoin, which is what the altcoins were. And so it sort of sucked all of that out of the space. And that's what I've seen. Is that kind of what you're saying, or what you're saying?
Absolutely.
Right.
Yeah. We really don't sell against like Cardano and Ethereum and Ripple anymore at all. It just doesn't even come up.
Yeah. Cardano, Charles Hoskin finally found the only real use case for Cardano.
Selling it for Bitcoin.
He finally found it. Cool. So, Ben, how long have you been studying Bitcoin and sort of involved in the space?
So Bitcoin I found in 2013. I screwed it up the first time, like a lot of people.
We all do.
You find it runs up to 1,000, you sell it, you think you're the world's best trader.
Yeah.
It takes you a little bit to figure out exactly what it is you were getting rid of. But I came back to it pretty heavily around 2016, which really when I went down the rabbit hole and I was the crazy guy in all my jobs, trying to pin down all his coworkers and tell them about Bitcoin at lunch and on breaks. And, once you start going down that rabbit hole, it consumes all of your mind's energy.
Yeah.
And it's all you really want to think about because you see what a monumental shift an asset like Bitcoin really is.
Yeah.
But it wasn't really until 2020 when Saylor and Strategy came out and entered as like that first corporate that wasn't associated with Bitcoin in the beginning. They weren't a mining company. They had no association. When they adopted it, that was when it really clicked for me. And I thought, this is the start. This is what we've all been talking about for years, is we're just waiting for one company to break that dam and make this accessible to everybody else.
Was it really one company, though, or was it really Metaplanet proving the strategy could be duplicated?
Well, there's been a big evolution here, for sure. But let's not discount that Strategy had to do a lot of work to make this safe.
But it worked for Strategy. But like until Metaplanet did it, it was like, could someone else duplicate it? Right?
Yeah. The proof of being able to do it and then being able to do it in another market was a huge step.
Yeah.
I mean, what Simon and Dylan are doing over there in Japan is amazing.
Yeah.
They found this really niche country with, a lot of weakness in their economy, not the right type of access to Bitcoin directly. You have to get it through your retirement accounts to get the tax advantages. They found a really unique setup there that they could take advantage of. But then what they did that was really good was they took the mentorship from Saylor. I think there's a lot of people that look at this and go, I could go do it better. But there's a huge amount of value in taking the wisdom from the people that have been fighting the battles for a really long time. And that's what Saylor's been doing. He's been proving the markets. He's been showing what products are effective and which ones aren't. He's been educating on what it means to be truly accretive for your shareholders.
Yeah.
And those guys took that and ran with it.
Yep.
You don't have to reinvent the wheel here. When someone's gone through and done all the work to show you, here's how you prove the value to your shareholders. Here's how you execute this playbook. Here's the steps you should take as you scale this. That's a huge head start for everyone entering the market now.
Yeah.
And now you're seeing a flood of them coming in. So everyone's going to tweak this a little bit and try to make it their own, but the playbook's out there. So you've just got to figure out how that fits into your organization the best.
Yeah. I want to understand the playbook a little bit better. And so let me kind of frame it up for the audience as maybe people are just starting to catch up. And actually, last time I had you here, I think that was around Thanksgiving or Christmas.
Sounds about right.
I remember we were down here doing a Swan event. I actually asked you a similar question. What's the difference of a company that puts Bitcoin on the balance sheet versus a treasury company? But now I see it as three actually different strategies there. I want to ask you about that real quick, but just for the audience listening, part of the reason why this is the most exciting thing is because Bitcoin gets kind of boring in bear markets, number one. But number two, we're seeing crypto-like returns, meaning we've seen companies doing 500% in the last couple of weeks, couple months. We've seen companies do 2,000%. The blockchain group's up 2,000% in 6 months. We've seen companies, I think Smarter Web's up like 8,000%. I mean, this is insane. 8,000%, 5,000%. And so sort of sucked the room out of the crypto space. But back to the companies. Last time I asked you about two, but now I sort of see three. So I want to see how you think about this. So there's like level one, which is like Tesla. I put Bitcoin on the balance sheet.
Yep.
Okay. Then I have And cool. Maybe GameStop is still in that area. Like, who knows what they're doing? They bought a little bit of Bitcoin. But they still have a business, right? Their business is over here. They have money in savings, their treasury, they put some into Bitcoin. Level 2 is like, it's a Bitcoin treasury company, but there's a business and they're trying to run a strategy. And I'd put similar there. So they have their medical business, but then they're also running a Bitcoin treasury strategy. Nakamoto says that they're going to run all these businesses. They're going to fold all that in. Jack Mahler's company, they're going to do all these financial. So you sort of have like these businesses with Bitcoin. And then level 3, you have the pure play. And the pure play is the Meta Planet. The pure play is the MicroStrategy, where really the stock is the product. And I see these getting priced differently in the market as far as the correlation of the stock price to Bitcoin's price. So how do you look at those 3 types? Am I looking at that right? Or would you combine those last 2?
I think that's a fair way to look at what's happening in the market right now. I mean, there's definitely a separation in the way that these companies are trying to operate. Some are focusing 100% on the treasury strategy. They're saying our equity is going to become our main product and we're going to securitize around our balance sheet. And we're going to find unique ways to use Bitcoin as the backing to bring products people desire, yield products, duration products, whatever it is that you're looking at. I think that there's still a segment of the market that we haven't seen yet, because even when you mentioned like Assembler, they came at it from a very similar approach to what Strategy did, where that core business really wasn't growing anymore. Now, we've seen recently they've made some announcements. They're trying to launch new uses for their product. So they're trying to grow it, but effectively the growth had stalled out of the company. The equity was getting punished because of it. Yeah. So they made a pivot like what Saylor did with Strategy, right? They were competing against Microsoft's. The core business was dying. What I don't think we've really seen yet in the market is a true growth company that's also running an active treasury. And I do think that that's going to bring a unique value proposition into the market, because when you actually have a company that's scaling the core operations and growing that cash flow aggressively alongside with utilizing the capital markets to run an active treasury, now you give the markets 2 things to focus on assigning value to. You're growing that income statement side. You're not abandoning it and making it an afterthought, because when you look at the way the market's valuing these companies, they're basically ignoring the core operations now, and they're just going to multiples of the balance sheet, right? Multiples of net asset values, what everyone talks about a lot. Right. But if you have a true growth company, or one that even hits a hypergrowth phase there, that gives you something really interesting to talk about, because you're now driving shareholder value from both sides of the financials. You're still driving it through the income statement. You're showing that aggressive growth. You're showing that you can deliver on a core product. And you're also making sure you're deploying the assets on your balance sheet in a way where you're constantly building that intrinsic value under each share. So I do think that actually over time, if someone could execute that appropriately, and I think you have to separate the responsibilities of those, because these treasuries, those are full-time jobs. You need to be engaged in the capital markets, looking at the terms that are happening out there, figuring out when the perfect time is to do a transaction, to issue preferreds, to issue converts, whatever it is you're doing. You need hyper-focus there. But I think that when you see both sides of those being run effectively, you've got a powerful combination for creating shareholder value. But we haven't seen that yet. We've seen
and when you say growth company, you're differentiating that from Assembler or a MicroStrategy whose business is sort of stagnant or dying. So you're saying we actually have a real company that's actually growing fast.
Correct.
Okay.
Which we haven't seen yet. And I would say that Semler and MicroStrategy are not in different categories other than the size and success of MicroStrategy's treasury arm, because they have similar core businesses. And in fact, MicroStrategy's core business is probably quite a bit larger than Semler's core business. It's just dwarfed by the size of the treasury operation, which has been so successful.
And I believe that's the answer you gave me last time I asked you that question, because you said if an Apple were to put Bitcoin on its balance sheet, the amount of Bitcoin it holds in proportion to the business is so small that it can't really wag the
That's right.
kind of a thing. And MicroStrategy sort of being the opposite. Their business is at, I don't know, 140 million a year or something like that. I don't know exactly. Versus what do they have, 15 billion or whatever in Bitcoin, right? So it's a big mismatch.
60.
Yeah, they're usually about a 60 million in free cash flow a year through Strategy.
60 million in free cash flow, right on.
But there is that nuance where it does need to be an asset-light business, because what you still absolutely need to have if you're planning to run an active treasury or using leverage against your balance sheet is you have to be asset-light. You can't have a lot of capital expenditures that you have to be making, because you still need that sensitivity on the balance sheet to the volatility of Bitcoin. Mm-hmm. So it is a special type of company that's going to fit into that slot. We just haven't seen it yet.
So this is, by the way, this is why, and God bless the Bitcoin miners, and that's a whole other category, but it's the reason that you don't see them being in the same kind of conversation. It's because most of them are vertically integrated and are still trying to play this, call option value of maybe doing HPC as well, or moving a lot of their business toward that. And so it doesn't have that sensitivity to the Bitcoin price that is driving, all this value in MicroStrategy. And so, there's Marathon that actually has the second most Bitcoin, but it just can't trade that same way. It can't offer securities and instruments the way that MicroStrategy can, because it's vertically integrated and has all these other assets. I do think, by the way, that a miner that basically only did, profit share and just did managed mining could do it, because then it would be asset light. You leave the assets on the balance sheet of their investors and just manage the mining for a profit share, could do a treasury strategy. But they seem all very distracted by HPC right now, which is reasonable because that's lucrative.
Yeah.
The one thing I would say that would be like another level further and maybe a different category of company, which is if it's a growth company that actually has a reason to be in Bitcoin treasury strategy, where there's actually synergy, and I think that's what you see the promise or the pitch, and like dangling Strike as maybe folding into the Tether SPAC at some point, or Nakamoto buying BTC Inc. and building financial services someday or something like that.
Right.
They're leaning into that because they know that actually will be the best possible outcome. And I think it's why MicroStrategy historically, until they kind of went pure play and realized all they actually sell is financial instruments, and that is what they sell,
right?
Which I can't wait to hear you kind of elaborate a little bit more on what you were saying in the pre-show.
Yeah.
But I think that's why you see these companies pitching that as their future. It's because that's what MicroStrategy did too. They were like, oh, we're going to do DIDs, we're going to do ordinals, we're going to do Lightning, like all these different things, trying to say that they were going to do something related to Bitcoin.
Yeah.
Because there should be synergies between having a huge balance sheet and talking about Bitcoin all day, and being able to leverage that Bitcoin for Bitcoin products, and leverage that balance sheet for Bitcoin products, and also leverage the fact that you're doing marketing and media around both, and it's synergistic.
Yeah.
And nobody's done that yet.
Yeah. Yeah. I mean, it's so early, we don't know what the best models will be yet, but the way that I was looking at it, and sort of the way Saylor sort of framed my mind around this, is that who is your customer? So who's buying the product? So right now I see in the market around all these new companies that are popping up, way smaller than what you guys have done, but these companies are starting with 2 Bitcoin and growing to 100 Bitcoin like really quickly, right? And the market is sort of pricing them based off of the multiple NAV, the MNAV, as you said. And then they're looking at, okay, well, why is it a 2 times or 6 times or 8 times or 10 or 18 times? And a lot of that has how fast they're adding that Bitcoin there. But those are all ways that we can evaluate how fast they're adding the asset to the balance sheet, and then how that will reflect in the stock price. So I'm looking at it purely from a Bitcoin lens. If I'm trying to understand similar, now I have like this Benjamin Graham value investor, like, well, what's the underlying business, and what's the profitability, and what's the EBITDA, and what's their cash flow projections? And okay, I kind of understand a healthcare business, but it's not really my niche, but I kind of get it. Oh, but then what's this Bitcoin thing? And like most of these value investors, they don't know about Bitcoin, and the Bitcoin guys don't know about that. So now I have this problem where I've confused my buyer, right? Because the first thing what we want to do is like, who's my avatar? Who am I selling to? And so when I look at people buying these things, or buying them off these multiples and these growth strategies, but now I don't know anything about biotech. And honestly, true fact, I invested into a fund about 2 years ago that was buying distressed biotech companies and liquidating them, and I lost half my money. So I ain't getting into that again. I don't know anything about that, right? So I kind of look at it like that. So maybe when you talk about like Bitcoin financial services, like some of these companies you mentioned, maybe that's a little bit more in line. But maybe if you get too far off sides, then you don't know your customer properly. I don't know what you guys think about that.
It also just depends on whether your treasury strategy scaled and was successful, because there's no one that, there's no analyst that covers BI software and covers Bitcoin treasury strategies, right? Like MicroStrategy. It's just that it ended up dominating, and all that people care about is that it kicks off some cash flow. Yeah. Because 99.9% of the people that are interested in MicroStrategy, probably 100% of the people that are interested in the stock, it's because of Bitcoin.
Yeah.
And so if Similar is able to get through that and sort of reach escape velocity and start to get on a program where they constantly are issuing new instruments and preferred shares and warrants and converts and more ATMs and et cetera. In that business, the balance sheet goes up to 20 or 30 billion or something like that, then it'll just be judged like MicroStrategy. It's just at this infant stage where it's starting out and they're still trying to figure it out that it's judged differently.
They haven't been able to reach escape.
No escape velocity yet on
Part
the
of it is
strategy.
you need to be communicating into the market exactly what you're intending to do with this strategy. So now that there's options out there, you can't just buy Bitcoin once and then expect people to be excited about it. We're in the show me phase of this strategy now, where there's a lot of companies saying that they're going to do what MicroStrategy does or be the next MicroStrategy. But now we're to the point where the investors are looking at this going, you have to prove that to me now. You have to show me the conviction, and you have to put out aggressive targets that we're going to.
Yeah.
And you're starting to see that pivot. And I think that was one of the things that was holding Semler back for a while, was no one really knew what they were doing. It felt kind of cautious for a while, and it wasn't until recently that they actually put out a goal to get over 100,000 Bitcoin, and then the market rewarded them with like a 20% week.
Yeah.
Right. So people want to see the leaders out facing their investors, communicating very clearly what the intentions are, and then showing the follow-up execution to take 100% get there.
Yeah.
Right. Radical transparency is kind of the theme of these Bitcoin treasury companies.
100%.
For any other company, you get information once a quarter.
Yeah.
Right? When they file their quarterlies, their annual report, that's when you're getting your information. The rest of the time, you're in the dark, usually unless bad news comes out.
Yeah.
Right. With these companies, you're watching their progress every single week. And that's kind of becoming the expectation. When you see Strategy out there, and now MetaPlanet as well, putting out announcements, what seems every single Monday, sometimes more than once a week, that's radical transparency. You're seeing the evolution in real time. You're watching that Bitcoin rating in real time. So if you're an investor in these preferred products, you know, one, where you stand on the capital stack, and you know how over collateralized you are. That's different than bonds. That's different than all these other products.
Yeah.
The radical transparency, but having the management team that's willing to take the time to educate their investor and their customer on what they're doing and how they're doing it, and then showing you. You hear Saylor talk about it a lot. The reason why they have an ecosystem around them that nobody else has with these ETF products that are out there. You get the income products with the MSTYs or the IMSTs.
Yeah.
You've got the leverage products. Now you've got the convertible bond fund. The reason that they can build those around Strategy is because they're completely transparent. They tell you exactly what they're going to do. They execute against it. They don't pivot. They don't hedge. So you can trust how they're going to react in the market to your products, right? You can execute.
And that's
strategy.
exactly it. That's exactly what Saylor made emphasis on, is that because the market knows exactly what they're doing, so vitality is volatility or whatever, right? So it's like they know that MicroStrategy will move in 2 times, 3 times to what Bitcoin's price is. And he said, imagine if God came and spoke to me last night and told me that Bitcoin's going to dump tomorrow and that I should hedge my position, and I do, and the market crashes and I made a bunch of money for my investors. They don't want that. They want me to actually lose money, because they need me to be predictable as to what I'm doing. Mm-hmm. And so what he was trying to say by that is that any other underlying business now adds unpredictability. Mm-hmm. So will I get a DOJ lawsuit? I don't know. Will I create a new patent? I don't know. But all of that unpredictability, all the operational risk, all the other risks that are associated with it, then start to drag it down. So I think, I guess that's a strong case for why a pure play is there. And I guess to the point that you're making, we don't know if this new category of high growth business and a treasury business will be valued. And I guess that's what we'll find out.
Well, let me ask you this. Why do you think that SoFi sponsors the Rams stadium?
Well, I would imagine so they get attention to their brand, right? So more people would use their product.
Okay, so that's part of it. Why else maybe?
Write-offs? I don't know.
Try to get people to buy the stock.
Well, sure, of course. Yeah, their product.
Yeah. But that actually has a material effect on the business, because if you drive interest in the stock, then you drive liquidity in the stock, which actually drives down your cost of capital.
Right. Yeah.
So I think that's the type of mechanism that everybody actually knows about in the mainstream, that Bitcoiners and retail treasury stock fans are just starting to learn about, that everybody else in TradFi already knows about.
Yeah.
So there's just like this rediscovery of things that are already known happening in the Bitcoin space right now.
Yeah, I love it. I mean, the way I look at it, and I gave a keynote in Prague, and I was basically talking about the first new financial asset in 500 years. And so we have this new thing, and we don't understand what it is. So it's sort of like this, and it's sort of like that, and it's sort of like that, which it is. but it's something new. And so we're just barely starting to discover what we can do with it. And so to your point, yeah, I think that could work. And we don't know yet because no one's pioneered that. And so it's exciting. It's exciting to see what we could do with an asset.
And it's all happening out in public because people have to kind of show their plans because, that's just kind of how it's going down. And, the Bitcoiner draft is well underway. Yeah, as everyone we've been, promoting Bitcoin with for the last 6-7 years is getting snapped up by these companies. And it's a fascinating time to be in the space for sure.
So where does it go from here? So couple things that I want to discover and I see what you guys think about this. So number one, how many of these types of companies can the market bear? And is this a bubble and they're going to all crash out? Let's talk about that one first.
Well, I'll attack one thing, which was there was a thesis out in market last year in 24 that there could only be one per market. And this was pushed pretty heavily, not actually by MicroStrategy. They don't sort of take sides like that, but I think it was pushed pretty hard by Metaplanet and Bitwise for quite a while as well. And a lot of other asset managers. And I think what was happening is that a lot of the crypto asset managers were seeing a lot of their funds drain away into MicroStrategy and related products. And they wanted to tell people that there was only room for one so that once you had your MSTR bag, you wouldn't take any more assets out of their funds.
Yeah, probably.
And I think the turning point was probably Saylor's speech at the Cantor conference in Miami last November, right before the election, which I think was the refining capital speech. And it really just it clicked with Wall Street in a huge way. It got really way easier to explain that just like any instrument or any asset that has a certain level of risk, you can give somebody some returns that are lower risk reward, and then somebody else picks up more risk and has the equity tranche, right? So it's just like mortgage-backed securities or collateralized debt or obligations or anything like that.
Right.
And once people kind of understood that, then I think they realized, oh shit, there are going to be so many of these. And I think that was really obvious, from that speech forward. And then the red wave happened a few days later and on and on. Yeah. And the big signaling to me that showed that this was definitely going to be a thing was really just, it was actually the marathon convert offering that sold out in a day and was oversubscribed for $1 billion plus or $2 billion or something like that. And I was like, oh, okay, Wall Street's going to snap up these instruments. And then MicroStrategy did, $20 billion of offerings in 2 or 3 months after that. And it was okay, off to the races. And then what you saw is the asset managers fall in line and flip the script on what they were pitching. And they said, oh, there's going to be lots of these. I want to have a Bitcoin treasury company ETF that actually buys a piece of all of these.
Right.
And that's where you saw the previous narrative about there's only room for one per market kind of going out the window because it's just not true.
Even though Bitwise did spin up an ETF for them and they've sold $2 million. It's terrible.
ETF for what?
For treasury companies.
Yeah, I think that's just in its infancy.
Yeah.
I think that will go do just fine over time. And there's a bunch of other people. I think it's happening more. I think that capital is going to the private deals because that's where the alpha is right now, is in these popcorn companies that are going up 20,000% in a few weeks and stuff like that. So there's a lot of insider games going on right now.
Yeah. Yeah. And you say the same thing? I mean,
yeah, I think there's a lot of room in the market still. I think we get oversaturated by news sometimes, and we assume that there's more of these at scale than there really are.
Mm-hmm.
Yep.
Most of these are still very, very small. Strategy is really the only one in the U.S. markets of true scale. So I think there's still plenty of room for more companies to run that same style of a playbook here. Is it going to be 50 or more? I'm not sure yet. But in terms of treasury companies, every company can be a treasury company.
Well, every
got a long way to go.
Every company will be a treasury company at some point. That was part of my keynote I gave in Prague. There's no way to survive if you're not.
Yeah. And you have to remember, the two biggest launches of a few months ago, the Tether SPAC, the 21 deal, and then Nakamoto, the Bitcoin Mag deal, neither can acquire yet. Their mergers have to close. So it looks like, probably August for Nakamoto and sometime later this year for 21.
Yeah.
And then they can start buying Bitcoin. So they're not even in the market putting out, orange dots on charts. They're not doing the thing yet. When they do, then it's going to get, I think, really, really exciting.
Yeah.
It's one of the reasons that we liked the structure of, we have to decide what to call this thing because nobody's going to pronounce it the French way. In French, it's actually Sequan.
Okay.
I think we should just call it Saquon.
Saquon?
Yeah, like the Bitcoiner football player.
Yeah.
We should just call it Saquon. Yeah, so Saquon.
Yeah.
So Saquon, this French company that's listed on the NYSE, SQNS if you're trading. provided that the shareholder vote goes as expected, on June 30th, like we can buy Bitcoin starting July 1.
Nice.
And that's one of the nice things about just doing it with an existing company and not having to wait for a de-SPAC or wait for a merger to go through.
Yeah. So we've talked about the different types of companies, 3 different ones. We've talked about even more hybrids that we haven't even seen yet. From that lens, I would say there's unlimited amounts of these companies. Mm-hmm. Even the ones that are the pure plays, let's just signaling just on that little piece, if they're making financial products for these different markets, well, like an ETF-like type deal, right? Well, how many of those do we have? Thousands of them, right? So I think there's unlimited room. But let's go to your company specifically, because honestly, I consider you a friend, but I haven't really heard a whole lot about it. You kind of snuck up on the market here. Yeah.
So it's deliberate because it's deliberate because of the timing of, you want to actually, you want to see the shareholder vote actually go through and like have it be a live deal. So I think that you'll see us be a lot, we'll talk a lot more about it come July 1.
Okay. So you're still sort of under wraps a little bit of...
Yeah, I've already said everything that I can probably say about it. Yeah. What I can tell you is just, the structure of the deal is like, us putting all of our expertise and network and experience across security, custody, investment management, knowing all the OTC desks and liquidity providers, knowing all the custodians and being able to evaluate them, put them through like intense due diligence questionnaires. And, so this is me, this is Jan, this is Jeremy, this is Brady, this is Ben, this is Joao. This is like the whole squad, going to work on behalf of one of these. And there's nobody else in the market that has our muscle for doing something like this other than MicroStrategy.
Yeah. So I would say when you look at what 21 or you call it Tether SPAC, whatever those guys are doing, you kind of have an idea of what they're probably going to do because of the businesses that they're already in. You look at Nakamoto and the businesses they're already in. And so to the point that you're kind of hinting to, we can see the kind of businesses that you're already in. So we kind of have like a little bit of a window as to where that could potentially go. What I would say to a lot of people that maybe aren't as in tune with what you're doing, Swan has always been, at least in my mind, like a media first company. You've always done an amazing job at that. Education first, which has been super important, but that's definitely going to give you a big leg up in the market. So you're the CIO?
Correct.
So what are you going to be doing?
I'm going to be running these deals.
Yeah.
So I was brought in. I don't think it was any secret in the market, what the plans were as soon as I came on, because I was really just focusing on one thing at that time. So I was a pretty public equity analyst for MicroStrategy pretty early on. I was one of the founding members of the True North group, so we had been covering these for a long time, figuring out what works, what doesn't work, how to execute these, and what it looks like to really run those well.
Yeah.
And so when I started working with Swan, they were one of my customers early on when I was doing consulting in this space. It was just so clear that this is such a unique place to operate something like this. Because you've got an entire company top to bottom that's built of Bitcoiners, which is very hard to find out there. Normally, in any other company that you're talking to, you've got resistance coming from one part of the organization or another. Maybe it's legal, maybe it's whatever, but someone's pushing against this. When you come to a place like Swan and the entire mission is to further Bitcoin, whether that's helping people build Bitcoin on their personal balance sheets and build their personal wealth around it, or whether it's talking to businesses and helping them secure their futures as well, it's got one singular mission there that you're pushing towards.
Yeah.
So for me, that was one of the most unique setups I could possibly find.
Yeah.
Couple that with what you just said with the media first approach.
Right.
You quickly realize how powerful that is when you start assisting these types of companies. There's a lot of companies that aren't going to be able to get their own name out there, right? This isn't native to them. They had a core business. That core business wasn't being on X and engaging directly with retail investors, right? So they might not be ready for that world, but we're built for that world. It's what we do every day.
I would say that is super important, that most people maybe don't even realize how important that piece is, because what you saw like with MicroStrategy, or back then with MicroStrategy, through the bear market, a lot of people were calling for liquidation and risks and things like that. And so if you didn't have alignment from the top through the board all the way through the shareholders, then there's going to be pressure to start selling Bitcoins and pressure to whatever, right? And so having everybody in the company aligned is what it's going to take to weather those storms. I want to take it, we got a few more minutes left. I want to jump to another topic, which is unlimited demand from the public debt and equity markets, hundreds and hundreds of trillions of dollars of demand in a very scarce asset. And we're already starting to see these two collide at a massive scale. I think the treasury companies this year have already bought twice as much supply as has been mined by the miners. I mean, we're talking about massive scarcity. Saylor said that he thinks that within a year, we could have 20 companies doing 10 to 20 billion each per year. So, I mean, we're talking about massive demand. Right now, I think we have about 50 million in Bitcoin per day coming into the market. So, like, what does that mean for the price? I mean, what are you guys thinking? Because when you think about the treasury play, not only are you, how much Bitcoin can we acquire to move the stock price, but then how much will those assets be worth in 5 years or 10 years? So then you have to start kind of putting in those future valuations. So I kind of have this theory I'm starting to work on, doing some research on, where a lot of people are expecting the CAGR to continue to slide down from 85 to 65, where we're at right now, to 40, and eventually 20. But potentially, because of the way Bitcoin actually started as a bottom-up approach, we could see the CAGR start to accelerate up as we go through the S-curve part of the adoption cycle. I don't know, some theories. I'm sure you have some. So what does all this like massive buying from these treasuries companies mean to you, and how you look at it from your own treasury strategy, sort of looking forward to the forecast?
Well, I try to keep this really simple when I start to think about it, right? The first thing that's happening is the arbitrage between the scarcity of Bitcoin and then the infinite supply of fiat currencies.
Yep.
So what I like to look at when I'm talking to people who are just trying to understand what's going on here, you start with what's going on with the US dollar. What are they signaling to you? What are they telling you they're going to do? And can you trust that? Well, what they're telling you they're going to do is continue to devalue that over time.
Right.
Right. And if they want prices to stay relatively stable from an appearance perspective in the market, that means the supply is going to have to be played with. You're going to have to change that. If you want the opposite side of that trade, you need something with the ultimate in scarcity, where it's completely inelastic to the demand for it.
Right.
And Bitcoin fits that. So when you get this inflow of demand coming for an asset where the supply is completely inelastic to it, the only thing that can ultimately give is the price. And I think that's what people are starting to feel now as you're seeing the demand ramping up from these treasury companies, because what they know about these companies is that they're constant accumulators, right? They're not sensitive to the price at all.
Right.
Right. They're going to be buying all the time. Their goal is to accumulate more Bitcoin per share for their shareholders. So they're going to be in the market as soon as they can get capital, whether that's coming through equity sales, whether it's through bigger transactions. And as you build up more and more of these companies, and those companies achieve more and more scale, you're putting this really heavy structural bid underneath Bitcoin.
Right.
And I think what people are starting to look for is they know that price in all these assets is set at the margins. And so if that supply starts to shrink a little bit, volatility can actually pick up, right? Because every big buy might have an amplified effect on it. Every big sell might have an amplified effect, but you might just be seeing the volatility more to the upside. I think we're getting to that phase now. People are starting to see that coming. And right now, it's largely coming from companies, but I think eventually you're going to see more of the countries getting involved as well. And that takes the gloves off in this fight. Right. I mean, when you see other companies fleeing to safety of Bitcoin from their own fiat currencies, that sends a really loud signal into the market.
Right.
And that's when I think you start to see that scarcity and that rush for people to get a hold of this asset before everyone else gets to buy it up before they do.
Now, Cory, you've been selling Bitcoin for many years through Swan Bitcoin, and you've definitely weathered some storms for sure. The bear markets have been notoriously bad for us to have to weather. Do you think this sort of changes? I think he said more volatility to the upside. Do you think potentially we could see where this gets to be more asymmetric to the upside, and then the drawdowns are a little bit more muted, or kind of what do you think in that regard?
I think it's basically if there is a large blow off top and like a ripping bull market, then inevitably the drawdown will be larger.
Oh, really?
Yeah. So that's just how I see it. So if
more volatility to both sides.
Not more volatility, just like, corresponding volatility.
Okay.
So it's kind of like if you see a bull market peak here in the next, 6 to 9 months, let's say, and I actually think it'll be before the end of the year, like usual, like previous cycles. If you see that peak at like 200, you have a pretty good shot of only seeing like a 40% drawdown after that and coming down to like 120.
Okay.
If there's a blow off top and you see it go from like 200 to 300 in the space of like 4 or 5 weeks,
like 2017.
Yeah, something like that, right? And we're kind of like a natural peak for just early December 2017 would have been 10K,
right?
But it went up another 10K in a week and a half,
right?
right? And so it immediately came back down to 10K and then dwindled down another 70% from there to bottom out at 3K by the end of 2018. So I would see it like that. Like whatever that blow off top is will disappear very quickly, and you'll give that back, and then there will be still a bear market from there. So if you doubled from 200 to 400, you'd come back to 200, and then you'd still see another 40% down from there. And that's 70% drawdown from peak to trough. So that's just all it is. Like, careful for what you wish for. The good thing is, like, very little money ever really trades at the blow off top. It's like, because it's so sensitive and volatile to the upside, and it's, I think at the peak of 17, it was like $1 in moved the price $30,
right,
or something like that. It was crazy how sensitive it was in the frothiest stage. So it just doesn't matter that much. And that's why I just tell businesses and families, individuals, whatever, secure the bag if you have some liquidity and establish your initial position. But from then on, just be buying all the time. Always have more Bitcoin the day after.
Right. One Bitcoin is one Bitcoin.
Always have more Bitcoin.
Yeah.
If you can.
Yeah, I was just thinking with the change in the makeup of the buyer. So we've gone from, still we're seeing massive retail selling into like institutional hands. And so like in 2017, you have the retail buyer rushing in to buy the top, and then they sell the bottom at the same time. And so maybe, these institutions have these mandates not to sell the Bitcoin. And so maybe that mutes it to the downside, or maybe that's just wishful thinking.
Look, I think you're going to have to see a cycle play out once it's more than just MicroStrategy. Because, anybody looking at this and seeing the way that they're being marketed, basically the same way that ICOs were marketed a few years ago, with the same tactics, and really in many cases the same marketing vendors doing, Telegram groups for stocks instead of, it all looks very similar. The way some of these are being marketed. And so I think you have a lot of sort of doubters, and a lot of the investors that fill these deals are, they're merger arb funds, and they're traders, and they're not known people. And like, you don't know how this is going to trade until a few months after, and maybe a year after, or 2 years after, or something like that. So I just think it's early. And we don't know. So whether you think that it started when Metaplanet proved that there was a second one that could do it, or you still don't think it's proven because you want to see Nakamoto and 21 out there trading, or whatever it is, it's just still so freaking early. Like,
we've been saying that a long time.
So few, well, it's even earlier for this, because so few people know anything about Bitcoin, and half of Americans don't know you can buy a fraction of a Bitcoin. I have a private client that I spoke to yesterday, a Swan private client, who's been buying from us for, he probably bought a huge bag 3 or 4 years ago. And he was like, he's geriatric boomer or whatever, but he was just, calling to see if he could buy some for his kid. And he was like, and I can buy less than one. Can I just buy like 25,000 for my, my grandson? And I was like, Yes, you can buy a fraction of a Bitcoin. The sats are like cents.
Yeah, that's great. So let's wrap it up. I want to ask, you have Larry Fink, the largest asset manager in the world, saying buy Bitcoin. You have Ray Dalio, the largest hedge fund manager in the world. You have President Trump, the leader of the free world. And then your cousin still thinks it's like a scam coin. So
that's on his wife's side, though.
That's on your wife's side. That's like the inbred side, right? Or whatever, not your cousin, obviously. But so what would you say to the people who still think that this isn't going to work? And even more specifically, now they see these treasury companies and they think it's even more of a Ponzi than it was before. What would your advice be to them for where they could go start to learn more about this and where it's going?
Well, first, I think we're overestimating how many people are still interested in the space. I mean, a lot of the people that I still talk to, they really have no concept of what Bitcoin is. They might on the fringe hear about these companies during some of those real blow-off tops, but they never really dig into what they are. And I think what Saylor says is really accurate, which is people find Bitcoin when they need to find Bitcoin.
That's true.
Until you need to find it, you're not looking for it.
Yep.
So there's still a learning curve. People are still blind to what's happening with the US dollar, what's happening to the value of their savings. And that started to get highlighted more throughout COVID. People started paying attention a little more when you started seeing those inflation numbers really heat up. But now that they're reporting them, and we all know that real inflation isn't what's getting reported, but now that they're reporting them in a range that feels more normal, I think people have backed off of that for a while.
Okay.
So I don't think it's going to be until we see whatever the next event is that causes interest in what's happening with the currency again to bring retail further into Bitcoin. And even then, they're probably coming in through ETF exposure. That's a really low friction way for them to get exposure. But I think that's actually good at the beginning because you need to have an easy way for people to get financial exposure to the asset, and then they start doing the research. Once you're invested in it, then you go down the rabbit hole to figure out what it is you hold and why you want to hold the actual asset itself. So I've almost met nobody along my journey who I've spent a lot of time with, showing them either videos, walking them through setting up a wallet, showing them how we can send our value here peer-to-peer without anybody else having to give us permission. I've seen no one that said, I'd rather own a paper representation of this asset.
Right.
It always ends with, there's a lot of value in sovereignty,
Yeah.
and I want to participate in that. So I think we've still got a ways on the journey, which means we all have a very big job to keep getting the word out there, help people understand, help them see what they're missing, help them protect the value they're working so hard to create, but finding it very difficult to hold on to. I think that messaging in the market and doing it from, a welcoming perspective, trying to bring them in, right? This is one of those things where we've found something that everyone else hasn't yet. And you want to tell them about it so badly, but they need to be ready for it sometimes.
They have to want
if you want it to stick. They have to want it and they have to need it.
In marketing, we learned that it's much easier to sell food to someone who's starving than to convince them that they're starving first. Cory, I want to throw you the last question.
Sure.
With Swan, I always applauded what you guys did with really pushing self-custody. You've made a strong statement in the market for years that we tell people to withdraw, we make it easy to withdraw, we don't want to hold their Bitcoin. But obviously buying equities is not self-custody.
Nope.
So as somebody who's been advocating for self-custody, how should somebody think about the trade-off of Bitcoin versus these? Should they be not buying Bitcoin and buy these treasury companies now because they're going up faster? Or how should they think about that?
So I'll come at it with two things. So I would say the advice that we give to our private clients who are going to buy, a lot of them are going to do this regardless of what we say. We say have 80% of your Bitcoin price exposure or your Bitcoin portfolio, Bitcoin related portfolio should just be regular 1x long Bitcoin. And you know what? We know you're going to go and do this anyway. Some of you,
Right.
Just keep it to 20%.
Okay.
So that's kind of the headline there. And then the other way that I would say,
So it's not a replacement for your Bitcoin stack.
not at all.
In addition.
You got to have your HODL stack. And if you want to go and play some games, just understand that it's a trade. And the point is to have more Bitcoin, So, good luck to you. I think the real magic here is in tapping pools of capital that have nothing to do with retail, that could buy self-sovereign Bitcoin or could buy your stock.
Yeah.
It's all of these other pools of capital that are trapped that we talked about at the outset.
Yeah.
That's the engine that makes these things big, and that's where MicroStrategy focuses for good reason.
Yeah.
But the launch phase of getting it going obviously is helped by retail participation. And they get to buy in early, just like they got to buy in early on Bitcoin, bottomed up, but it eventually gets taken over by institutional buyers that really need this. And then the other way I would think about it for individuals, I like the concept of a sovereignty multiple, which is basically like how much more valuable is Bitcoin in self-sovereign, self-custody than some other asset. And it depends on where you live and the jurisdiction that you're in and what their rules are and kind of the rule of law. And it depends on your own personal threat model of like boots on neck 6102 attacks and things like that.
Yep.
But I tend to find like in the West, you should have at least probably a 50% boost on over any other asset. Bitcoin in self-custody should be worth at least 50% more than Bitcoin being held for you on an exchange or with a custodian. And it gets worse from there for every other asset.
Yeah. Good. All right. We'll wrap it up with that. Thanks so much.
Thanks for having us on, Mark.